Hello. We're back again. Today is the 26th of February 2025. We know it's a bloodbath. I'm going to go through an in-depth of what has been taking place in the market. This analysis is going to integrate both the fundamental analysis as well as the technical. Given the dynamic nature of the crypto market, the figures and insights reflected here provide only a snapshot by the time of us going live. The crypto market has experienced significant volatility over the past 24 hours, characterized by a sharp decline in total market capitalization, heightened liquidations, and a shift in sentiment towards extreme fear. Let's look at the breakdown, right? The total market cap stood at approximately $3 trillion. However, the drop was reported to 2.9 trillion, reflecting a loss of roughly 400 billion from recent highs. This suggests a decline of around 6 to 7% within a 24 hours window, with the lowest point since November 11, 2024 of about 2.71 trillion. The discrepancies in figures may indicate intraday fluctuations and different data sources, but the trend points to a significant contraction. The trading volume was reported at $159.1 billion, though it's lower than the $215.3 billion cited by Coin Codex earlier in February, suggesting a potential cooling of trading activity and downturn. High volume paired with declining prices often indicates panic selling or capitulation. Liquidation events have been massive. 1.5 billion in total liquidation was reported. And another report was about $431.96 million over the last 24 hours. The breakdown shows in 1 hour, there was $35, $35.72 million with about $34, $34.37 million longs and 1.35 shorts. In a 4-hour window, there was $71.22 million with longs of about $66.14 million and in shorts of about $5.08 million. In the 12-hour window, there was $116.12 million with longs of $90.94 million and shorts of about $25.18 million. The dominance of liquidation is around about 1.4 billion, as we had reported yesterday. So the open interest was reported at about $56.68 billion, a notable figure that reflects the total volume of outstanding derivative contracts. High open interest amidst falling prices often signals over-leveraged positions, aligning with liquidations data. So funding rates for perpetual futures, though not explicitly detailed, are likely elevated given the liquidations of long positions. So the key asset prices to look at, Bitcoin was at around 87,918, down by 6.72% from the earlier levels. Ethereum was at 2,434.31, reflecting a decline. BNB, which is the Binance coin, was at 618.64, and Solana was at $136.92. A report of about $140 on Solana. XRP is at $2.18. This is considered a bargain. If you can get XRP at $2, it's a bargain. Yesterday, I was talking about this kind of market with panic selling as well as extreme fear in terms of the fear and greed index. This indicates an opportunity for accumulation for those that understand which narratives they want to follow. So if you are now looking at where XRP is at, some believe this is a bargain. So it's up to you if you believe in the narrative of XRP. Take that into account because it's very important. The market sentiment with fear sitting at 21. Yesterday we were talking about 29, now which is extreme fear. This shows that the market really is having a bad time. if you look at the SEC, it dropped the case against you, which was positive 45. The ETF saw a $1.54 billion outflow, signaling institutional retreat. Additionally, pump fund volume plummeted, indicating reduced speculative activity in meme coins and smaller projects. There is fear out there. And the global economic factors one has to look into include the fears of the trade war that are taking place. The Street, which is a journal, had an article on this on February 3rd. And this still lingers around, though there are no specifics on the new macroeconomic triggers cited in the past 24 hours. But you still have this thing that creates uncertainty. Bitcoin's dominance likely increased just slightly. Historically, it's been between 56 and 59%. As per Coin Checkup as well as CoinDex. So the altcoins like Ethereum have retreated a little bit with a minus 9.76%. Others bled more heavily. So the flight to Bitcoin is still regarded as a safe haven for those that are in crypto. And the DeFi market cap, really, if you look at DeFi, was sitting at about $92.81 billion. Right? A modest slice of the total, suggesting resilience in decentralized finance despite the broader sell-off. So there is no specific transactions on the network volumes or the wallet activities that were able to pick up in the last 24 hours. But it's just that we've got declining prices with trading volume suggesting profit-taking of forced sales rather than organic growth. So BTC fell to 676 from 184, testing the support level at about $87,000 and resistance at $90,000. A level tied to November 2024, that's where resistance and support levels were. So if the resistance lies around $93,000 and the support is at $87,000, the support is at $93,000 and the resistance is $95,000. The recent breaches were breaches that went downwards. So if your support was at 93 and now experiencing 87, you know that we have breached that support and therefore we are on our way down. The RSI is likely oversold because it's sitting at below 30, given the steep drop. If you look at this, it provides short-term uncertainty with MACD that shows a bearish crossover reflecting momentum loss. We did expect that there would be this thing with regards to the bull trap, but now we are right into what is taking place. If you look at the horizontal trend channels on a short-term basis, there's a break below 87,000, and if it happens, this could signal a further downside to almost 80,000 US dollars, while a rebound will take us above 90 all the way to 93. If we breach below 87, we will then go to $80,000. But if we breach the 90, we'll go all the way to 93,000. If you look at Ethereum, its 9.76% drop to 2,434 tested the support of about 2,400 and the resistance of about 2,500, with the resistance sitting at around 2,650. The steeper decline versus Bitcoin suggests altcoin weakness. We know. If you look at the other indicators, we see that there are oversold conditions with high liquidations of long positions. Earlier, as per the Wall Street Journal, there were $614 million of liquidations that had taken place. I spoke about some of them yesterday that amplified the drop. And therefore, a potential double bottom near $2,300 and $2,400 could form if buying resumes. But failure here risks 2,000. So we may see Ethereum getting to 2,000. If we look at the total market cap, there was a drop from $3.29 trillion US dollars to about $2.91 trillion or 3.01 trillion, which is piercing a 21-day moving average. And therefore, a bearish signal, unless it's reclaimed, we are losing the total market cap. You've got an outflow in terms of crypto. These are cause for concern, but one hopes that at least the selling won't persist. If it does persist, we might end up retesting the trillion market cap of the crypto. A rise in volume on the decline confirms bearish conviction, though a spike in volume could signal a reversal. The $1 billion in long liquidations indicates a flush out of over-leveraged positions, often a precursor to stabilization or bottoming process. So that 1.4 billion or 1.50 cents billion we were talking about yesterday, those liquidations might indicate a flush out in the market. And a lot of analysts are thinking we are close to a bottom scenario that could give us a stabilization and a precursor of the market regaining its composure or momentum, right? Or losing the momentum, the downtrend momentum, and therefore regaining the balance for an uptrend momentum. The dominance of long liquidation reflects a market caught off guard by a sudden shift. Over-leveraged trades fuel the cascade, amplifying the drop. Stabilization may follow as leverages unwind. That's why I've been motivating, making these suggestions that the market is not a market for leverage. You can see now the leverages that have gone out. It's a bloodbath out there. Unfortunately, they have created this perpetual cascade that amplified the drop because now you've got this huge liquidation taking place. The extreme fear that is sitting between 21% and 25%, which is where we're almost at, often marks capitulation. Historically, a buying opportunity. This is what I've been saying consistently, right? However, sustained outflows, if you've got the $1.54 billion of the BTC ETFs that are outflowing the market, this could delay the recovery. And therefore, if you look at your BTC, really your support level will be sitting at about $87,000, while your resistance is sitting at about $93,000 or $95,000. Your Ethereum, really, your support is sitting at about $2,400, and your resistance is sitting at about $2,650. And your total market cap, if you look at the market cap, the support is sitting at about $2.7 trillion, and the resistance is sitting at between 3 trillion and $3.2 trillion. If you look at the potential scenarios, if you look at your bearish case, right, continued selling breaks BTC below $87,000 and the market cap below 2.7 trillion, targeting 2.5 and BTC targeting 80. That's a bearish scenario. So if Bitcoin goes below 87,000 and it's really going towards 80 and the market cap is losing its 2.7 reach point, targeting 2.5 trillion, that's the bear market. Things are going south, going the wrong way around, or are going the right way around if you are taking shots. But the bullish scenario will be triggered, right, if the oversold conditions relief rally and they reclaim the 90,000 US dollars in terms of BTC, and the market cap regains the 3 trillion US dollars driven by deep buying and short covering. This will show you that now we are moving towards the bull scenario. So Bitcoin breaching 90,000 US dollars, market capitalization at 3 trillion indicates bull because that will be driven by buying. But if you breach $87,000 and it goes below that, and you expect that it will rebound at $80,000 if you do your fib retracement, and if you have your market capitalization breaching the 2.7 trillion and we expect it will retrace at 2.5 trillion, that's the bear market. Take these two scenarios as the indicators that will indicate to you what is taking place. And therefore, you would have the anticipation to anticipate what the market is doing. This is very important. So the past 24 hours has seen the crypto market undergoing a severe correction with a $400 billion market cap loss and $1.51 billion in liquidations and a plunge into extreme fear. Fundamentally, Institutional outflows and fading speculative favor weigh heavily, while technical oversold conditions, the key support levels hint at a potential bottom. High trading volumes and liquidation data suggest a shakeout, setting the stage for either further downside or a rebound. Traders should monitor in the $80,000 to $87,000 and at $90,000 range, and funding rates for clues on the next move. Long-term investors might view this as an opportunity for accumulation. The market remains volatile, so caution and adaptability are paramount. It's very important for us to be cautious. This is what I wanted to give the community as an update. And please use these indicators. I've given a very suggestion on how to pick up where the market is moving. Look at Bitcoin between the support at $87,000 and the resistance at $90. Whichever one we're breaching tells you where we're going. If we're breaching 87, we're going to $80,000. If we're breaching 90, we're going to $93,000. Any breach is indicative of what is likely to happen. When you look at the breach and also look at the total market cap, if we're breaching 2.7 trillion, we will hit 2.5 trillion. Therefore, if we're breaching 2.7 trillion, it means we're in the bearish market. The liquidity is flowing out of crypto. Hence, the market cap is reducing. But if the market cap is rebounding, then chances are we are going to hit $3 trillion in market cap. And therefore, you look at Bitcoin. If Bitcoin is breaching the $90,000, it means we're on our way up, because then there is the flow of liquidity into crypto, and therefore Bitcoin still remains the safe haven. Use these indicators to give you a sense of direction where the market is at. Please take into account what I've said yesterday. For a long-term investor, this is the best thing that could happen, because it opens up opportunities for accumulation. You don't know how long or how far the market will take before it rebounds, while giving you these testing levels that would be the next retracement positions if you use your feed. Depending on what kind of investor you are, you need to monitor what is taking place in the market. But if you're a long-term investor, getting XRP at $2, it's a giveaway. Same thing with Ethereum, where Ethereum is sitting at. However, that would be the case only if the narratives you support are those coins. It doesn't matter if XRP is sitting at the point where other evaluators and analysts are saying it's a good point, it's a good position to be at, if you don't believe in XRP. This is not one of those things where we are shilling a certain specific token, a certain specific coin. This is one of those sessions where you have to make sure you've done your narratives, your analysis. We've spoken about these in the previous episodes. If you haven't watched them, please go back to the old episodes. You will see when we talk about the various narratives. Build on what we are providing, because we provide a foundation, a base on which you can then use as a guide for you to do further research. Update your trading strategy in line with what you are picking up on the fundamentals. But then also check your fundamentals against the technical. When I give an analysis, I provide both the fundamental and the technical, because I want you to mirror both so that you can have a balanced view of the market with the correlation between your fundamentals and your technical in terms of the positions. This offers me an opportunity to lend a hand. And I hope whatever I provide helps you in your quest to be a successful trader, to learn about trading, or to ensure that you are not losing your hard-earned money. This journey is a tedious journey. You need to be meticulous, you need to be detailed, but more than anything else, you need to... Crypto is not gambling. Crypto is a science. Because crypto is trading, you have to use your technical analysis, you have to use your fundamental analysis for you to decide on what you take action on. But you've got to recalibrate and recalibrate, learn and relearn, improve yourself as you go, understand where you've made mistakes on your trades, improve on those mistakes going forward, and you become a better trader as you do that. Okay, that's the end of our episode today. To those who watch our episodes, please can subscribe, provide us comments, and tick the bell notification so you can get a notification as soon as a new episode is available. We really appreciate your support. Liking and subscribing helps with the algorithm to improve the channel. We want the channel to be accessible to as many people as possible to get the advantage of building their own portfolio in a way that is not risky or scammy, but in a way that helps them build a portfolio with the basics that are necessary. Build on top of these basics. Never take what is being provided on these episodes on my channel as if it's the gospel. Please go and check it. I provide you the information as at the point of where the market is at while we are recording. There could be incidences that might alter the market. So it's important for you to build on top of it. For example, as I'm talking to you now, the news is coming out that one of the presidential candidates in Georgia has been arrested. What that does is it creates market sentiment of caution. Just like we said in the episode, the trade wars and fears of wars are creating uncertainty in the market. And as a result, it's important to make sure that whatever we provide, please go and further research and build on top of it, because that will help you have a balanced view and update your trading strategy in line with your research. Use as many sources as possible, but credible sources. Thank you very much for being with us. We appreciate you taking the time to join us. See you in the next episode. Bye for now.